So here to do a really quick session for us. We're going to really just focus on a couple of key things. We've been talking about bounces this week, how you can potentially look at bounces. Want to reiterate, kind of the plan for you. Look at yesterday's performance in a couple of instruments just to show you again how bounce trades could potentially work. It's not my favorite personally. It's just not. I love breakouts, which we talked about last week. And there's another strategy which we're going to talk about next week, which is a pullback or a bounce with a breakout. So it's a combination of the two, and I really like that strategy a lot. And we'll talk more about that. Just the straight bounce is tough, because you've really got to, like I said before, you've got to be selling, in like a big green candle. So if you're going to be looking for a bounce, price is moving down and it's coming back to an area, so you're in a downward trend coming back to an area where you'd like to trade from. So if you're in a short position, so you're looking at sells, it comes past a certain level, and now it's coming back to that level. So now you've got a big green candle, and then you've got to sell into that. So you're selling into momentum and then take a short. Or the flip side is price is moving up, it breaks a level. So price is moving up, you've got a key level down here. Now price is going to come back to it. So you've got a big giant red candle, you've got a lot of momentum coming back to this area. You've got to be able to buy off of that. Psychologically, it doesn't work great for me. But again, some people love that strategy because hey, I'm always buying stuff at a discount. If I'm buying the bounce, I'm always getting stuff at a lower price. People like that. Their perception is I'm closer to the top or the bottom, right? So if I'm selling, I want to sell the top and watch it go down. If I'm buying, I want to be able to buy the bottom. So when you're looking at these bounce trades, there's more of a perception of I've caught that move, right? You're getting it closer to the top or getting closer to the bottom. But that's why there is no strategy that's right for everybody, because like that one, it's a great strategy and it works very well when you execute it consistently. Psychologically, though, it's not for me. So that's why we've got to be in tune with who you are, what you're looking for, what your specific trading strategy is, and how do you make those things work. So there's news coming up today, which is why I'm going to keep this pretty short. We've got a couple of things on the agenda. Let me pop this over here. First thing is President Trump is going to be speaking here any minute. Let me just refresh this. When he starts speaking, sometimes Amar will put over here on Financial Juice at the very top. So if he does that, we'll be able to see it right here on the Financial Juice site, just embedded at the top. If not, then we can we can drill down on this folder here and go to the White House source and then see if we can find it in there. But he's speaking on Fox and Friends. So why are we worried about that? We're not worried. It's just it could be a potential catalyst for something in the marketplace. He's speaking ahead of non-farm payroll. This is one of the most widely traded news events out there. So, we had employment yesterday. We had, I should say employment, we had unemployment yesterday, which came out, it was negative. We had, another 3.5 million people, on unemployment, which is terrible. But he's speaking this morning, and this is a wild card, ECB president spoke earlier. Now Trump speaking on Fox and Friends. This is it's a wild card. And, while the market isn't open yet, the market won't be open for, regular trading hours won't begin. The live regular trading hours won't begin here for another hour and a half. So, there's potential for whatever happens to be said during this to be a catalyst in the marketplace for off hours trading when you've got a lot lower volume. Then that's followed by the non-farm payroll report, which again, a catalyst, potential catalyst for volatility in the marketplace ahead of regular trading hours. So when the market's too open, there could potentially be a lot of volatility right on the open, as people have had a chance to look at the news and kind of think through it for about an hour, before they actually come in and start regular trading. So there might be a lot of volatility, especially when you watch Forex pairs. You'll see a lot of volatility around non-farm payroll, but on the open, we could potentially see increased volatility. We always see a lot of volatility on the open anyway, but there could be even increased volatility around that. So just keep that in mind. Again, like I said yesterday, and I'll reiterate with all news, don't worry as much about what is actually said in the news itself. Watch the news, know what's going on, know what's happening, but try to be aware if you're forming a bias in the marketplace. Remember, everything that we do in the market should be quantifiable. It should always be something that's based on our trading method. So which is why I talk so much about creating a trading method that works for you, right? We want to give you a plan. So we talked last week about creating a plan. I give you all the things you needed to create a plan for a breakout strategy. This week we've talked about bounce strategies. It's the same stuff that applies from last week. You're just looking at a little bit of a different thing. You're looking at pullbacks, right? Whether you're pulling back up if you're going short, or you're pulling back down if you're going long. We're just looking at pullbacks, we're looking at key areas. Everything else still is the same. The mindset, the money management, the trade management, where you set your stop losses, how you manage your stop losses, all of those things that we talked about last week are still applicable with this other strategy. You've just got to think through, and we always talk about pros and cons of each one. Think through which one is going to work best for you and back test it. Get your large sum of data. You've got to get it tested over 150 trades, at least back tested 100, minimum 100, back test, and then forward test in a dummy account, in a paper trading account for another 100 trades, 150 trades. That way at the end, you've got a really good sample and you know what to expect. It's the only way. It's the only way, guys. It really is. So anyway, with that said, let's pop over here really quickly. I want to hit a couple of things that are coming up. So we're going to talk real quickly over here on the futures charts. I've got E-minis, so the S&P. Got the S&P right here. We've got crude right here, and we've got gold over on the right. So what's going on? Yesterday, we mentioned we're in an upward trend. As we're coming into the market, we're in an upward trend on the 30-minute. That confirms the 4 hour. The 4 hour is also upward. So we've got a bias. We've got a long bias in the 4 hour. We've got a long bias in the 30-minute. This is where we were coming into yesterday. So at that point, what are we doing? We're looking for pullbacks. We have a key level up here at 2880. We talked about that prior to the market opening. 2880 would be a key area for us, and whatever happened around that would happen. We also, on a 30-minute, we're setting up a key area right through here on 2870. So again, how you manage your trades on a bounce is really going to be dependent on your specific strategy. I look at 4 hour time frames, and I place my support or resistance lines based on 4 hours. So all of these lines that are drawn anywhere on any of these charts are based on 4 hour time frames. So with that said, you can just say, hey, I only want to do business. I only want to trade around 4 hour, whatever my line is here based on the 4 hour. Or we also talked about on Monday or Tuesday that you've got really a top edge and a bottom edge when you're looking at potential breakouts. So you've got, let's make this bigger instead of scrolling around like that. What am I doing? You've got kind of a top edge and a bottom edge when you look at really anything. Support or resistance isn't just a line. We use a line to describe where we're going to trade from, but it's really an area. We mentioned that a couple times previously as well. It's really an area, and there's a top edge to it. There's a bottom edge to it. So if we look here, our top edge is really around this 2880. Bottom edge is closer down here around 2870. Ultimately, though, we see price yesterday, broke through, came back, and really struggled around this 2880. Struggled. Finally, hit 2870 as that bottom, and then moved on. However, even 2880, if we're utilizing a stop loss point that's in line with what that average trade range is for the instrument that we're trading, even that would have worked, because the average trade range on this, if we put an ATR on here, let's add a study real quickly. If we put an average, what am I looking for? Average, here we go. So if we put an ATR on here and just kind of look through and just kind of look across and see where the average is, and let's make it a little smaller so we can really see. So just kind of look across here, see where our peaks and valleys are. If we look across average trade range, and I'm not looking here on the drop down, I'm looking just if I drew a line across and looked at my peaks, through here. If I look at the average trade range over kind of the right hand side of the screen, if I draw this line across the peaks, it's about 12.3, 12.4 points. You could just say 12, just go whole numbers, 12. Right? If we look at this and then we look at on a 30-minute, we use a 12-point stop. That gives us enough to live through, pullbacks. Not all of them, but if we set this here and looked at where this went, we'd be pretty darn close, to live through that pullback there to the bottom edge, which is about 12 points. So anyway, pulled back and now it's moved on. So now we've got another key level. I don't have it marked, but 2,900 is whole number. Whole numbers are always end up being, points of support or resistance. Just 24,000. When you look at the Dow, 24,000 is a big key level, which we broke yesterday as well, and off trading hours. So, some things to watch today. Obviously news can be a catalyst. Whatever comes out with non-farm payroll, how the market reacts to non-farm payroll will be a catalyst. Right now, we're looking at potential long positions. The 4-hour and the 30-minute are in agreement. Now, non-farm payroll comes out, and all of a sudden, off trading hours, the market just plummets down, and then regular trading hours begin, and we start, obviously we may have to make different decisions around how we trade that, right? So, but right now, coming into this, we're still looking at potential long positions because the 30-minute is in a long bias, and that agrees with the 4-hour. Now down here on crude, a little different story. No, really not. We've still got it's barely. We had a big down day yesterday. The 4-hour had switched over to a long bias, and the 30-minute is just kind of testing that right now. The 30-minute though right now is still long, even though we're moving down. 24 is a point for us here where we'd previously marked for support or resistance. It was resistance for us. It became support for us. We can see how it's been supported. It broke through, and looks like it could potentially move lower. However, the bias on this, if we go down here, the bias is still long on the 4-hour. So the 4 hours long, the 30-minute and off hours right now is still long technically. However, it's looking like it may be rolling over here. So if this rolls over prior to 9:30 Eastern, 8:30 my time, then this will be a mixed bias. If we have a mixed bias, then we don't trade it. Gold, gold on the 30-minute is up. Gold on the whoops, what did I do here? Where'd it go? Where'd it go? Gold over here on the 4-hour was down, but it just flipped back to up yesterday. So that big move yesterday in gold did get enough to flip us back to a buy opportunity. So gold has a long bias, and on the 30-minute we have a long bias. So these are both confirmed. Gold, we talked 1700 yesterday. It finally cracked it. It was resistance. It finally broke it, then came back to test it, and then moved. And it moved to another level that we had on our charts. We didn't even see it. This has been on our charts for quite a while, 1722. And now, again, here we go. We're just bouncing off of 1722. So if we're looking for pullbacks, 1722, 1725 has certainly set up as an area that we could potentially look at for pullbacks on gold in order to buy. And the reason that we would be looking at buying is because our 4-hour bias is long and the 30-minute bias is long. Now, as I've said before, maybe you don't do it based on Maybe you base your bias on something else. You've got to figure out what's going to work best for you. I use moving average crosses on different time frames to develop what my bias for that, for directionality, for trading direction might be. If you have some other indicators that you want to throw in there, put them on. Just make sure you've got a quantitative method for measuring each day what the bias is and how that works. The indicators are only there as filters. They're only there as filters, and whatever comes out the bottom is what you trade. So the indicators aren't telling you that anything is going to happen. Support or resistance lines aren't saying something is going to happen. They're just telling us where things have occurred and what has occurred in the past, so we can make decisions around that. And it helps us to make quantitative decisions because they're giving us real numbers, real indications of things that have happened, and then we make decisions around that. All right, so I'm just about done. I'm gonna jump out of here real quickly. Let me pop this over here on this one. What's happening in the crypto land? Big moves yesterday. We talked about 207 as a resistance line for us, as a potential breakout point over here on Ethereum. It did. It broke it. It broke that. Came right back to 207 as a retest, and now it's trading up here at 210. So that one, again, looking at pullbacks, we're seeing breaking key areas, pulling back to key areas as price ebbs and flows. But it is continuing with a long bias here on Ethereum. Bitcoin, same thing. Bitcoin finally cracked 10,000. Cracked it yesterday, kind of at the end of the day. It cracked 10,000, but that's a big resistance point for us. So it hit 10 exactly, and then pull back. Yesterday when we were looking at this range here, between 9,400 and basically 9,200. It broke 9,400 and kept moving for us. So Bitcoin is continuing that upward trajectory as well as Ethereum is. We do have the Bitcoin halving coming up pretty soon. Another 3 days. So Monday. Monday. We should be if everything continues properly here. Monday should be the actual halving event for Bitcoin, which again, who knows what'll happen. Some people say it's going to go, through the roof on the halving. Others say that, it'll just kind of stay where it is. Nothing will happen. It's really, no one knows. No one knows what's going to happen. It depends. Don't let the bias. Don't let someone else's news and opinions create a bias for what you'd be trading. Just trade what the charts say. That's all we really need to do. We just need to trade the charts. It could create volatility, and there seems to be increased volatility leading up to that. But it's already moved up to around 10,000. Does the halving event occur? Does it blip up a little higher than people sell off because they've gotten to a high that hasn't been achieved in a while? Very possible. Very possible. Definitely Bitcoin right now is moving more than Ethereum. They typically, kind of move together. Bitcoin, as Bitcoin does rise in price, though, it typically pulls other coins and other currencies up with it. So, there is that potential, especially if we see a big movement in Bitcoin, to see that ripple across the cryptocurrency market. So we'll keep an eye there and see what's happening. See what's happening, if I can speak correctly. As far as things go in the bots and whatnot, I haven't pulled it yet. I mentioned yesterday I'm going to take 500 out of the account that's in CrystalBot and put it into another trading platform called Bybit. Bybit is an exchange, and I'm going to use that API from that to link to another automated trading method. The reason I'm going to Bybit is because it settles into USDT. So like right now, like with Binance, CrystalBot's done great trades, but my account pulled back, the account value pulled back, mainly because of the value of Ethereum. So trades were done well and executed well to get growth, but then the price of Ethereum dropped. It kind of be like settling into the pound, and then the pound suddenly weakens against another currency. You've lost value there. It's the same thing with this. I've lost value in my cryptocurrency account because ETH has lost its value. In Bybit, since they settled to USDT, whenever I take trades and I take profit from the trades, I can go back into USDT. So if I'm not in a trade, I can hold and tether, and that way my account value stays the same. I don't, even if the cryptocurrency market dumps and the value of ETH and the value of Bitcoin or Ripple or whatever it might be, if they all tank, my account value doesn't tank on their values. My account value stays a solid, USD, US dollar value to it. So I think that's a pretty cool thing with Bybit, being able to settle into USDT. And I'm going to look at that as tradable opportunities with some of these bots so that we can settle into USDT and not get hit by the crypto values dropping. So more on that as we get to it. I haven't gotten to it yet. There's been a ton going on. There's a couple of projects I'm helping to launch here in the crypto space. So as we get closer on those, I'll certainly let you know. One of them is a really cool indicator package that you can set alerts on it as well, that was actually developed by a quant that I met. It's amazing. It's absolutely amazing. It's a trend trading software, but when you get a 1, you go long. When you get a 1, you go a blue 1, you go short. You can set alert here on TradingView and enter your trades based on that, so you don't really have to worry about watching the market over and over and over. But it's solid. It's really solid, and we can see like here, this would have entered on this 1, which would have been here, and we would have exited or changed direction. So if we're trading on ETH, we would have shorted at 237, and then we would have flipped our position at 138, and then we'd be in that position long again right now. So I mean, it's you're not calling the tops and bottoms with it, but it's a trend trading measure using a whole bunch of different mathematical combinations, different indicators. It's all the same thing. It's taking all these filters that are configured in a certain way, dropping what's happening through the filters and spitting out do we have a trade opportunity or not. So yeah, cool stuff, really cool stuff. So I'm helping him get that out. So I'll talk to you guys more when that one's ready. That's actually one of the processes that I'm going to be trading in the Bybit account in addition to some of the automated stuff. So anyway, that's all. That's everything. So we've talked about key levels. Have we talked about all the key levels? I know we talked about gold key level 1722 to 1725 area on gold, 2900 big level here on the E-minis. Crude, be careful with crude. It's mixed. It's really manic right now. And whatever happens with employment, know that'll be a catalyst. We've got the non-farm employment change coming up at here in 10 minutes, along with the employment rate, which will be published. And the forecast is for a 16% unemployment rate. So that, again, this could be very volatile news. Whatever happens around this, if it's positive, don't even make any assumptions. Just watch the charts and do what the market is telling you to do, right? Based on your trading plan, take the action based on your trading plan for what you see on the charts. Don't let the bias of whatever occurs with the outcome of the report drive your trading, because the market typically doesn't act the way you or I or anyone else thinks it should act. The market does what the market does, and we just want to be that little flea on the elephant's back following along. We don't need to try to change the direction, and we just get run over. All right, so that's it. I'm gonna let you guys go. I'm gonna get out of here, see what is happening with that Fox and Friends guest speaker, and then obviously we'll watch what happens with non-farm payroll here in just a moment. So have a great day. If you have any questions, hit me up. Let me know. I'm happy to answer them. Happy to help out. All right. Bye.